Let's talk about the issues surrounding Russia and the investment case and how it's going to develop as the geopolitical story develops as well. Polina Kurdyavko, head of emerging markets and senior portfolio manager at BlueBay, joining us now to give us her assessment. Polina, great to see you. Thank you very much indeed for your time today. We are looking at a difficult situation on the ground. As an investor, how are you treating this? How are you thinking about this? Are you actively kind of maneuvering the portfolio around what is happening here? Or are you just stepping back and waiting for the situation on the ground to develop?
Hi, Guy. Good to see you again. Well, we are witnessing the formation of the new geopolitical order. And today, the closer alliance between Russia and China just shows to us that actually we are likely to witness what you would call a Mexican standoff, which is getting a much bigger scale than what the conflict started with. And if I think about how to position portfolios for that, I guess there are 2 points one should keep in mind. Firstly, often as an investor, the most difficult thing to do is not to invest. But in cases like this one, with uncertainty on the outcome and a lot of geopolitical tension, often that's the best thing to do. So for us, when it comes to Russian and Ukrainian assets, we're very cautiously positioned. And sometimes there are risks that you just can't price. That's, to me, is one of those. Now, stepping back, I think the key challenge for the markets will be twofold. Firstly, the timing. In a way, we're all expecting and would be relieved to some degree to have a quick resolution of this conflict, or the time horizon for either a conflict or a resolution remaining on the short side. However, I do think that the challenge for the markets is that if this conflict translates into a more frozen, longer-term conflicts, and that's even more difficult for the markets to trade. As for the tail risk, I think the tail risk here lies with the implications for European markets if escalation of conflict comes with shortages of commodity supplies.
Okay, well, let's focus on the Russian market for just a minute longer. If sanctions are put into place, even preemptive ones, upfront ones that U.S. Congress is looking at, even if Putin does not invade Ukraine, will they have the same effect as the sanctions we saw put into place in 2014? Will it be as dramatic and as bad for the Russian economy?
I think the key question lies what type of sanctions we're talking about here, because even today on the menu, we have sanctions from primary sanctions on the debt, which I feel will be relatively easy to deal with, versus secondary sanctions on the debt, which will create more complexity for the index providers, but ultimately reduce liquidity in those assets, which will be the main challenge investors have to deal with.
Do you think there's, we were talking about Carlsberg just a few minutes ago and its business that it has in Russia. Do you think there's a danger that investors end up with stranded assets in Russia? What would you say to investors that have assets there now? Would you be withdrawing them? Would that be the sort of the strategy that is worth pursuing? Or do you think it's worth leaving them there considering the hit that has already been taken?
I guess the key question is, are we talking about financial assets and investments, or are we talking about real assets? When it comes to financial investments, again, as fixed income investors, we are paid to deliver performance and maintain liquidity of our portfolios. Given the challenge that the current sanction threat puts on the liquidity of the underlying investments, often it's prudent to reduce your exposure because of the liquidity. When we're talking about real assets that you have as investments in Russia, it's a very different ballgame because it's not as easy to withdraw. And in this case, I do feel that those who have real assets in Russia don't have much choice at this point in time than to wait, which is why my key risk lies in the long timing of the resolution of that conflict, which puts a lot more pressure on real assets.
Let's talk about one asset that Russia has, and its primary export, oil. We have also been paying attention as this geopolitical risk premium, you could say, has been priced into energy markets broadly. Oil firmly above $90 a barrel. So long as there is strength in the oil market, how much can Russia really hurt?
At the end of the day, as an oil exporter, financially, Russia will be relatively well off. the question comes, what is the implication on the banking sector in Russia as part of their upcoming sanctions, and to what extent that can disrupt money flows regardless of where the oil price is. That's, to me, is a bigger risk.
Polina, you started off talking about the relationship between Russia and China. As investors, how do I think about that going forward as well? Are we basically drawing back into the kind of Cold War era spheres of influence? And do you think ultimately we're going to end up with two economies, two economic blocs? And I'm wondering how much interplay you see between them, because at the moment, despite the fact that we've rolled back some globalization and despite the fact there has been some sort of unpicking of that relationship, they are still absolutely massive. Do you see further divergence happening? And if so, again, how should investors think about this?
I think that to some degree, when we've looked at the conflict between Russia and US, for the US, dealing with Russia is to a certain extent easy, given the lack of economic ties. Bringing China in that equation makes it a lot more complex, given China's economic weight and the interlinkages between China and the global economy. And in my view, when you think about investors' reaction to the uncertainty that we're currently witnessing on the geopolitical front, ultimately, I feel that that will reduce the flows in both countries until we have more certainty. In that sense, I feel for China, I guess there's more to lose than for Russia, given that Russia has been a lot more cautious, or investors have been a lot more cautious on Russia.